Stop what you're doing for a second. I want you to picture this. It is April 29th, 1975. You are standing in a humid living room on the outskirts of Saigon. You are staring at a calendar on the wall, and you are realizing something terrifying. You have effectively run out of days. Outside, the North Vietnamese army is tightening the noose around the city. You can hear the shelling of Tan Son Nhut Air Base rattling your windows. The regime is collapsing, and you have a window of maybe 48 to 72 hours before the world as you know it ends. You are standing there with a decision that is going to define the genetic future of your entire lineage. Do you stay? Do you submit to re-education camps, poverty, and potential execution? Or do you take the gamble of a lifetime and attempt to secure passage on a barge heading out into the open ocean? Now, look at your neighbor. He's a good guy, a prudent man. He played by the rules his whole life. He has a bank account stuffed with South Vietnamese piastres. He has been saving for 30 years. He has government bonds in a safe. He has deeds to his land. In 48 hours, every single one of those papers will be worth less than the match you'd use to burn them. He is a millionaire on paper and a pauper in reality. But look at the family down the street. The patriarch is a jeweler. He isn't frantically packing suitcases full of clothes. He is sitting in the corner, engaged in a very specific, quiet activity. He is sewing. He is taking what look like thin, rectangular wafers of yellow metal, wrapped in delicate rice paper, and he is stitching them into the hems of his children's trousers. This is the Kim Tan system. These aren't your standard Western gold bars. These are 2 gold leaves, extraordinarily thin, weighing exactly 1 tile, about 1.2 ounces. They are embossed with the character for gold. They weren't designed for investing. They were designed for one thing only: mobility. Here is the brutal math of survival in 1975. You want to board a verified commercial vessel to a safe harbor like Malaysia? Too bad. That price doesn't exist anymore, because the commercial lines have ceased operation. The only way out is a spot on a smuggler's fishing boat, a vessel not even designed for the open sea. And the black market price for that seat? Roughly 2 to 3 taels of gold per adult. If you show up with paper currency, even stacks of US dollars, the smuggler might hesitate. Dollars are bulky. Dollars can be counterfeited. Dollars draw attention. But the Kim Than? That is the universal language of get me out of here. Between 1975 and the mid-1980s, over 1.6 million people exited Vietnam. We know them today as the boat people. But if you look at the forensic accounting of that migration, what you are actually seeing is the largest unauthorized transfer of private wealth in the 20th century. And it was facilitated almost entirely by fractional gold. The autopsy of this event is crystal clear. The families who relied on the banking system stayed behind and lost everything. The families who converted their labor into portable, high-density sovereign assets boarded the boats. Let me be very clear about what we are discussing today. This is not investment advice. I am not telling you how to hedge against 5% inflation or diversify your portfolio. I am telling you what nobody in the mainstream financial press has the stomach to say out loud. Precious metals are not for making money. They are not for trading for a loaf of sourdough bread during a recession. Gold is for that specific geopolitical moment when the social contract snaps, when the map changes colors. When you need to move a lifetime of accumulated labor across a hostile border without the permission of the state. The Vietnamese boat people didn't just get lucky. They engineered one of the most sophisticated wealth transfer protocols in history. And the secret to their success relied on the physics of the element itself. You might ask, why gold? Why not diamonds? Why not just stacks of cash? It all comes down to the density-to-value ratio and the psychology of the search. Think about a standard 1-ounce Western gold bar, the kind you buy from a flashy website today. It's a block. It is thick. It is rigid. If you tape that to your body, it creates a hard, unnatural angle. Any border guard patting you down feels a hard, rectangular object immediately. It screams contraband. The genius of the Kim Tan was its malleability. Because 24-karat gold is soft, these thin leaves could be bent. They could be wrapped around a waist like a belt. They could be flattened inside the sole of a shoe. When a guard pats down a refugee carrying gold leaves wrapped in fabric, it doesn't feel like a weapon. It doesn't feel like a rigid bar. It feels like part of the clothing. Furthermore, let's get inside the head of the guard. Let's look at the visual psychology. If a guard opens a bag and sees a recognizable stamped bullion bar, his training kicks in. Bingo. That is an asset of the state. Confiscation is immediate. But gold leaves? Often wrapped in plain paper or appearing like scrap metal to the untrained eye? They exploit the cognitive gap of the low-level bureaucrat. It looks like industrial material. It looks like aluminum foil. By the time the guard realizes what he is holding, the psychological threshold for seizure has shifted. And this isn't just a story about Vietnam. This is a recurring historical algorithm. It happens over and over again. Let's rewind the tape to Vienna, March 1938. The Anschluss. Nazi Germany annexes Austria. I want you to imagine two bankers sitting in a cafe. Banker A has a diversified portfolio of Austrian government bonds and a safe deposit box full of currency. He feels safe. Banker B, on the other hand, has spent the last 6 months converting his liquidity into diamonds and sewing them into the lining of a heavy wool coat. Or he's converting cash into gold coins, specifically Swiss Vrennelis or British sovereigns. The Nazis implemented something called the Reichsfluchtsteuer, the Reich flight tax. It was a capital control mechanism designed to strip emigrants of their assets. If you tried to leave with a bank transfer, the state took 25%, then 50%, and eventually, they simply froze the accounts entirely. Banker A with the paper assets? He is trapped. His wealth requires the validation of the very institutions that are now hunting him. He cannot bribe a Gestapo officer with a bank ledger. That ledger doesn't buy freedom. It's just evidence of his identity. It makes him a target. Banker B, however, possesses assets that are P of extensively documented testimonies, most famously adjacent to the operations of Oskar Schindler, but also in thousands of individual escape stories where life and death hung on a simple transaction. A diamond for a visa, a gold coin for a truck ride. Why did the SS officer accept the bribe? Why did the corrupt border guard look the other way? Because even the oppressors know that their regime's paper promises are temporary. Gold and diamonds represent a value that exists outside the system. When the Third Reich collapses, the Reichsmark goes to zero. The diamond does not. The lesson here is brutal, but you need to hear it. Paper assets are a claim on the future performance of a society. Tangible assets are a claim on the laws of physics. When society turns against you, the paper evaporates. The physics remain. Now, I know what some of you are thinking. That's ancient history. We live in a digital world now. That stuff doesn't apply to me. Wrong. Let's look at the forensic data from just the last decade. The rules of physics haven't changed one bit. Take the Syrian Civil War, 2015. The Balkan route. Over 1 million people moving from Turkey to Greece, then upwards through Macedonia and Serbia to Germany. We have interviewed the smugglers. We know the pricing models. The cost to cross the Aegean Sea in a rubber dinghy, a death trap by maritime standards, fluctuated between €1,000 and €1,500 per head. Now, compare that to the legitimate ferry ticket. If you had a passport and a visa, it would have cost maybe €15. The markup on illegality is 10,000%. But here is the critical data point that everyone misses. The smugglers did not accept Syrian pounds. They didn't care about your savings account in Damascus. That currency was effectively dead. They demanded euros or US dollars, cash up front. Families who had kept their savings in the local banking system found themselves destitute overnight. Their wealth was locked in a digital ledger they couldn't access, denominated in a currency nobody wanted. Those who held physical US dollars or gold jewelry were the ones who could pay the seat price. Now, fast forward to Ukraine, February 24th, 2022. The Russian invasion begins. In the first 72 hours, the electronic banking infrastructure of one of Europe's largest nations faced an existential stress test. ATMs in Kiev and Kharkiv were drained within hours. Cash limit withdrawals were imposed instantly. You might have $50,000 in your Privat bank account. On the screen, it looks real. But standing at the border crossing in Medica, with the power grid fluctuating and the internet spotting in and out, that number is a hallucination. This brings us to the modern myth I hear all the time. I don't need gold, I have Bitcoin. Let's forensically deconstruct the refugee with a USB drive narrative. Yes, there is one famous story of a Ukrainian refugee who escaped with $2,000 worth of Bitcoin on a thumb drive and swapped it for cash in Poland. It made headlines everywhere. But that is the exception that proves the rule. To make crypto work as a survival asset, you need a functional civilization stack. You need electricity to power your device, internet connectivity to sync with the blockchain, a counterparty who knows what crypto is and is willing to trade for it, access to an exchange to convert it back to fiat. In Mariupol, during the siege, there was no electricity. There was no internet. A Ledger Nano wallet was just a piece of plastic. Gold requires zero infrastructure. It does not need a satellite link. It does not need a battery. It works in the dark. It works offline. It works in a basement with no signal. Gold has high liquidity velocity in low trust environments. A peasant in a rural village in Moldova knows what a gold ring is. He does not know what Ethereum is. If you need a ride to the next town, the ring works. The seed phrase does not. Furthermore, look at the behavior of that crypto refugee once he reached safety. Did he keep his wealth in Bitcoin? No. He immediately converted it to Polish zloty. Why? Because he needed to buy food, shelter, and clothes. Digital assets in a crisis are at best a transport mechanism. Physical assets are the liquidity itself. If you want a control group for this experiment, look at Venezuela. The bolivar didn't just fall, it ceased to function as a measurement of value. Between 2013 and 2018, we saw inflation rates that look like typographical errors, percentages in the millions. A middle-class family with a pension fund in bolivars saw 30 years of work reduced to the price of a single egg. This is not hyperbole. This is the mathematical reality of hyperinflation. But in the mining regions of the South, and eventually in the markets of Caracas, a new currency emerged: gramas, small flakes of raw gold. Barbers started pricing haircuts in gold flakes. Grocery stores accepted gold. Why? Because the US dollar was banned or hard to find, but gold was local, verifiable, and immune to the government's printing press. Those who held gold saw their purchasing power not just preserved, but relative to the local economy, it skyrocketed. They could escape to Colombia or Brazil because they carried a currency that the border guards in those countries recognized. If you are realizing now that your 401k and your savings account are essentially compliance tokens that only work when the system is healthy, you need to pay attention. Hit that subscribe button. I am not a financial advisor. I am a historian of collapse. I look at the wreckage of past empires to show you where the structural fractures are in your own. Drop a helicopter emoji in the comments if you understand that Plan B isn't paranoia. It's history class. Now, let's get into the part that usually gets people thrown in jail. So, you have your gold. You have your plan. You make it to the border of a safe country, let's say the United States or a Eurozone nation. This is where 90% of survivalists fail. They prepare for the collapse, but they don't prepare for the entry. In the United States, there is a law called the Bank Secrecy Act, BSA. You probably know the rule. If you travel with more than $10,000 in cash, you must file FinCEN Form 105. Here is the loophole that amateur lawyers on the internet love to cite. Bullion is not defined as a monetary instrument under the BSA. Technically, under Title 31 of the U.S. Code, gold bars are classified as merchandise, not currency. So, the internet logic goes, I can carry $50,000 in gold bars, and I don't have to check the yes box for monetary instruments. That is technically true. And it is a fatal mistake. While you might clear the Bank Secrecy Act, you are walking straight into a customs buzzsaw. Under Title 19, you must declare everything of value that you are bringing into the country. If you fail to declare merchandise, your gold, you are not committing a banking crime. You are committing a smuggling violation. The penalty? Civil asset forfeiture. The government does not need to prove you are a criminal. They seize the gold itself. The gold becomes the defendant in the lawsuit. Once seized, the burden of proof shifts to you. You have 30 days to petition. You must prove, with paper documentation, that the gold was acquired legally. Imagine the scenario. You just fled a war zone. Your house was bombed. You don't have the receipt from the coin shop you visited in 1998. You don't have a permanent address. You don't have a lawyer. The government keeps the gold. You get a piece of paper saying, Notice of Seizure. Game over. This is why stealth is a losing strategy at the destination border. The professional protocol is hide it to exit the danger zone, declare it to enter the safe zone. Now, let's go back to the exit phase. We need to talk about the tactical geometry of the bribe. Most preppers go out and buy 1-ounce gold bars or 1-ounce coins, eagles, maples, Krugerrands. This is a massive tactical error. A 1-ounce bar is worth roughly $2,500 to $3,000. Picture the checkpoint. It's 3 a.m. It's raining. A nervous teenage conscript with an AK-47 is manning the gate. You need to get your family through. The going rate for a bribe is maybe $200 or $300. If you hand him a 1-ounce bar worth $3,000, you have created 3 fatal problems. Overpayment. You are paying 10 times the price. You will deplete your life savings after 3 checkpoints. The change problem. Do you expect the guard to give you change? He won't. The greed trigger. By revealing you have high-value bars, you signal that you probably have more. You have moved from being a customer to being a target. The guard might decide it's easier to shoot you and take the bag than to let you pass. You cannot chip a piece off a gold eagle with your teeth. This is why the boat people used leaves and why modern professionals use fractionals. You need 1 gram, 2.5 gram, and 5 gram bars. Or the combi bars, which are credit card size sheets that snap into 1 gram squares like chocolate. A 1 gram piece is worth roughly $80 to $100. This is the perfect unit of transactional bribery. You hand the guard 2 1-gram chips. It's approximately $200. He puts it in his pocket. It's small. It's discreet. It's a transaction, not a jackpot. He waves you through. Granularity is survival. You stratify your liquidity stack. Silver for daily bread/fuel in the early stages. Fractional gold for bribes, passage fees, and smugglers. Full-ounce coins/bars for restarting life at the destination. Why does this work? Why does the guard take the metal? This is the ultimate lesson in political science. When a regime is collapsing, the enforcement class, the police, the military, the border agents are the first to know. They haven't been paid in 3 months, or they are being paid in script that buys nothing. They are scared. They are looking for their own exit strategy. When you offer a guard the currency of the dying regime, you are insulting him. You are offering him trash. When you offer him gold, you are offering him certainty. He knows that gold is politically neutral. He can take that 5-gram bar, hide it in his boot, and whether the communists win, the capitalists win, or the religious fundamentalists win, that gold is still worth 5 grams of gold. It is liquidity without liability. My grandfather, who survived the chaos of post-war Europe, told me this explicitly. A gold coin is the only passport that never expires. The guard accepts the bribe because he is betting against his own government. So, how do you operationalize this? If you are sitting there waiting for the CNN breaking news alert to tell you it's time to buy gold, you are already too late. Here is the protocol, distilled from 70 years of refugee forensics. Go small, not big. Stop buying monster boxes of silver and 1-ounce gold bars exclusively. Build a stockpile of fractional gold. 1 gram, 5 grams, 10 grams. Decentralized storage. Do not put all your assets in one bag. If that bag is stolen, you are dead. Use a money belt. Sew pockets into undershirts. Distribute the risk. The loss ratio. Psychologically accept right now that you will lose 30% of your wealth during the escape. That is the exit tax. Bribes, theft, dropped coins in the mud. If you arrive with 70%, you have won. The documentation defense. If you have receipts, keep them. When you hit the US or EU border, declare it. Officer, I am carrying family assets for relocation. Be boring. Be bureaucratic. Do not be a smuggler at the finish line. Understand the asset class. Gold is not an investment. It is insurance. You don't buy fire insurance hoping your house burns down so you can make a profit. You buy it so you aren't homeless if it does. If this analysis gave you a new lens on wealth, hit that subscribe button. The algorithm hates this content because it scares the advertisers, so I rely on you to share it. Drop a helicopter emoji if you are positioning yourself for the turbulence ahead. Tell me in the comments, what is your exit asset? Silver? Gold? Or are you betting on the USB drive? History is a wheel. It's turning again. The question isn't whether the crisis is coming. The question is whether you will be the one standing at the closed border with a frozen bank app, or the one walking onto the boat with a future sewn into the lining of your coat. Pattern recognition is not panic. It is preparation. I'll see you in the next deep dive.